In this video, we will talk about Lucid Motors, why its stock price crashed, and what does it mean for us, and more importantly, if you should buy or sell its stock. Over the past few days, the rumored merger between Lucid Motors and Cciv was finally confirmed. Many people, myself included, thought that this would push the stock price even higher. When the confirmation came in, the stock price collapsed from $60 to $30, an almost 50% price decrease. I am sure that by this point, many of you watching this video have already watched many other videos or read articles describing the aftermath. The quick version is that when private investors of Lucid Motors saw the interest in the stock, they decided to ask for a bigger share of the cake when the company goes public. Michael Klein, the founder of Cciv, likely did not have any other choice but to comply, because if he does not, the merger may collapse and the share price would tumble back to $10 from a price already around $60 at the time. Ultimately, when the deal finally got confirmed, the public shareholders of Cciv were diluted, which explains the price collapse that we witnessed. There are many conclusions we can draw from all this. The most important one is to be aware of what we are trading. On the surface, we are trading the fundamentals of companies. What does the company do? The future outlook, the team, the leadership, and so on. However, the reality is that we are really just trading the speculation surrounding a stock, and that is even more true in the case of SPACs. A stock moves up or down based on how many people are willing to buy or sell it at one point in time, regardless of the reason. Buying into hype and speculation on a possible merger is a valid reason for investors to buy in a stock, as long as they are willing to accept the additional risk that comes with those circumstances surrounding the trade, and structure the trade accordingly. What I mean by structuring the trade are split into three parts: when to buy the stock, how much to buy, and when to sell. A stock should be bought when there is reasonable certainty that it will go up in time. Cciv definitely had reason to go up, because the merger was not yet confirmed, and many people wanted to quote-unquote get in early, thus creating this frenzy around the stock. Then, the quantity to be bought should be based on the risk. When I decided to get in the trade, the price of Cciv was already at $30 level. It was the historical high of the stock at the time, so buying all the allocated amount at that point seemed to be suboptimal. So far, 1.5% of my portfolio is in Lucid Motors, and that allowed me to absorb and limit the damage from the price correction from the perspective of the entire portfolio. Finally, it also comes down to when to sell. This part has been the hardest because we may not have predicted the current outcome and assumed that the stock price would keep going higher as soon as the merger was confirmed. Going forward, it would be recommended to lock in the profit periodically to make sure that the price corrections would not simply wipe out all the unrealized gains that have been accumulated thus far. Could we have done something differently, given the elements that we had at the time? Honestly, there wasn't much that we could have done. The only meaningful choice was to decide if the stock should be bought when there was a premium of almost 500%. But as far as guessing the terms of the merger, there were no significant hint that a confirmation of something everyone was hoping for would end up in a price collapse of almost 50%. It would be important to consider going forward the possibility of private investors seeing the hype around their company, becoming greedy, and decide to dilute the shareholders. Next time that we see a SPAC that is skyrocketing upon merger rumor, We should be careful and reduce our risk when the merger announcement is realistically going to come out within a few days. With that being said, things are still looking good for Lucid Motors. It has pocketed a large amount of proceeds from equity sale and now has the funding to start manufacturing vehicles. The reason why people were attracted to Lucid Motors in the first place is because they perceived the company as an alternative of Tesla before its share price started to significantly appreciate in value back in 2020. They think that Lucid Motors has a good product, is aiming at the right segment, and has a good team to execute the strategic plan. With the successful equity sale from a company's perspective, they also have a lot of money to speed up their growth. Before we move on to my recommendations, if you like my content, please like, comment, subscribe, and check out my channel for more stock analysis videos. My recommendation is to buy the stock and to trade the upcoming swings or to invest in the company's future. If your approach is to swing trade, then buy at the price level where supports appear and aim for at least 30% of profit. If your approach is to invest in the stock's future, then start accumulating the shares every time the stock dips lower and hold it for at least 12 to 24 months. If Lucid is as successful as we predicted, the current price correction would not matter. For those who invest, it is also important to remember that any company may encounter difficult moments. Tesla had cash flow problems before, and NIO once fell below $2. Because the stock is still a startup, the maximum exposure that I recommend is 3% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.